Hey everyone, it's Haley Thomas again with C4 Elite Real Estate Team and Coldwell Banker. We are going to talk about FHA loans today and hopefully answer some questions that you may have and just help it to become more clear your understanding of FHA loans. What is an FHA loan? It is a government-backed mortgage insured, covered by the Federal Housing Administration, so the FHA. It's often used with first-time home buyers, very popular with first-time home buyers. Some of the reasons for that are the requirements and qualifications. You have a lower minimum credit score requirement. It can be as low as 500. With that, it's typically required to have a 10% down. For a maximum of 97.5% financing, the credit score needs to be at 580, and that would get the down payment around 3.5%. So I'm going to go ahead and list out the different requirements on these. The down payment can be gifted from a relative or from a government program, actually, which is commonly done as well. The employment needs to be 2 years work experience or 2 years with the same employer. The FICO score of 500 to 579 requires a 10% down, or a FICO score of 580 and above would be the 3.5% down. The loan is only for primary residence, and the income is verified with pay stubs, tax returns, and bank statements, or bank statements. The appraisal has to be done by an FHA approved appraiser, and the property has to meet HUD guidelines. And the back end debt ratio, mortgage plus all monthly debt, can't exceed 43% of the gross monthly income. However, some do allow up to 50%. Some lenders do allow that. The front end debt ratio, which is the monthly debt payments excluding the mortgage, shouldn't exceed 31% of the gross monthly income. However, some lenders do allow up to 40%. The bankruptcy issue is that you have to wait at least 2 years. Foreclosure is 3 years. And you also have to reestablish your credit and show good credit history after the bankruptcy or foreclosure. Some exceptions can be made for extenuating circumstances, and that just depends on the lender. The FHA loan limits for 2019 is $314,817, which is up from 2018, and that was $294,515 for the loan limit amount on FHA loans. The FHA rates compared to other programs, the FHA requires 2 mortgage insurance premiums. The FHA has an annual premium that varies. Most FHA home buyers get 30-year mortgages with down payments of less than 5%. At that, the premium is 0.8% of the loan amount per year. So for a $300,000 home, that amount would be $2,400 annually. A premium upfront of 1.75% of the loan amount is paid at closing. In order to get rid of premiums, the loan must be refinanced, and we'll go through that in greater detail in a minute. It can be streamlined refinance, and that is a much simpler process in that it does not require income verification. There is not a full credit check done typically. There is no need to meet or to calculate the debt to income ratios, although that's obviously a good thing to always be aware of what your debt to income ratios are. The mortgage has to be paid on time for 12 months, and there's often no appraisal required as well on those streamlined. And that is a way to remove the insurance premium that you're paying. The FHA down payment, like we said before, is 3.5% of appraised value or asking price of the home, whichever is less. It must be paid up front. It cannot be included in the costs of the home loan. And it is regulated. The source of the down payment can require documentation depending on the circumstances. For example, when more than 2% of the sales price is put down, or when it appears excessive based upon borrower's history of accumulating savings. And that's at the lender's discretion, whether they will require documentation on that. Here's some acceptable sources of a down payment. Out of your savings or checking account, cash saved at home, or other account types, savings bonds, IRAs, 401k, investments, gifted funds, like we talked about before from a relative or something, and sale of personal property. And the list does go on from there. Down payment is not, again, they are not closing costs and considered totally separate from that. The mortgage insurance premium, or it's often referred to as PMI, private mortgage insurance, it reduces the lender's risk because it's a government-backed loan, and it is required for all FHA loans. Effective in 2015, if the loan to value reaches 70% or less, you must carry mortgage insurance for the life of the loan. It can be removed after 11 years if more than 10% was put down. And it also can be removed when you do a refinance, like we talked about before. We'll switch it over to another type of loan, and we'll remove that mortgage insurance premium. So to recap, an FHA loan is typically used with first-time home buyers, folks with lower credit scores trying to build their credit, and it is a great option for those out there that are having a hard time qualifying to buy a home or have a small down payment. And hopefully that has answered your questions today. Please give us a call at C4 Elite Real Estate Team. We'd be happy to point you in the right direction of somebody that can answer your questions and help you get into a new home. Thanks so much. Have a wonderful day.